You're seeing a lot of investors move into those more defensive sectors like consumer staples, like utilities, trying to get out of the way of the big sell-off in those cyclical sectors like technology, like consumer discretionary. I think making a move into consumer staples and utilities would make sense if we're going to have a recession in the near term, but I don't believe we are, and that's why I'm saying exactly the opposite. Although in the short run, consumer staples and utilities look like a safe place to hide, I think over the next 1 to 3 years, you're going to wish that you hadn't been there because I think rates will go higher. I think the economy continues to do well. A lot of signs are pointing towards expansion, whether you're looking at 3.5% GDP growth last quarter, GDP now for this quarter is around 2.9% growth. Corporate profit growth is 24.9% in this quarter, year over year, and revenue growth is 19%. So yes, earnings are slowing down a little bit in terms of the earnings growth, but earnings are continuing. The economy is still strong. So for that reason, I think we have a ways to go before the next recession.
Jason, how confident are you in Apple? I mean, I know you've been a long-term holder, and longer term you are confident, but in terms of what this may signal, I mean, it's not just Hon Hai, Lumentum, and the list goes on in terms of Apple suppliers, but this is also what it could mean in terms of spending on these devices.
Right. So, I mean, we've seen this movie before, right, where suppliers guide down, or they, yeah, we have. Absolutely.
I mean, they guide down, but they also say that we're not going to post handset units anymore at a time when everybody's doubting the number of handsets they're going to be selling. I mean, that seems like it's a little different this time instead of the past movies.
It always seems different this time, but the reality is it isn't in our view, and here's why. I think it's unfortunate that these suppliers are guiding down. They're not citing Apple. There's been some inference that it's Apple, but we don't know that for sure. But that has happened right along in line and on the back of, like you mentioned, with Apple saying we're not going to disclose units anymore. We actually view that as a pivot and a pulling of investors away from what we've been saying for a long time, which is if you're looking at just unit growth in Apple, you're missing the bigger picture on the long-term fundamentals of that company, which is this is a software and emerging software and services company over the next 5 years, 10 years, and it deserves a different multiple than a hardware company. Tim Cook is saying that's exactly how this should be viewed, and we continue to think that that is correct.
Have you bought on the dip here?
No, we have a full position in Apple. We've had a full position in Apple for a while. I think those that don't have money in Apple, you could absolutely buy this dip. It's very attractive on a long-term basis. But here at Albion in our flagship portfolio, we've had a full position, and we're not looking to take it above that.
Chris, you say that the two big negative factors facing the market are the trade war with China and rising interest rates, the Fed. And you see the odds of trade war relief at a low 30% anytime soon, and the odds of the Fed indicating a pause in the interest rate hikes at 10% in the near term. So how do stocks keep moving up if those two big negatives are still in place for weeks and maybe months to come?
Well, I think when you look at the Fed, they've definitely communicated that they're going to continue to keep raising interest rates. They might take a pause in the middle of next year. So in the short run, I think if you're looking for the Fed to give you some relief by indicating that they're going to pause, I don't think that's going to happen. And I think, that, like I said, the odds are probably less than 10%. Your big hopes in terms of those two fears are some type of thawing or some type of relief in terms of the concerns around the trade war with China. The idea that we're going to have a trade deal with China by the end of the year, I think is not likely. And I think people are hoping that there's going to be a big breakthrough coming on the heels of President Xi and President Trump meeting in Buenos Aires at the end of this month. And it's possible that there's going to be some positive language in that direction. But again, I think there's a lot of hope placed in that fact. So really, I think if you're looking for those two fears, it's going to be some type of thaw, some type of announcement that the trade war with China is moving towards a resolution rather than the actual resolution itself. That's your big hope if you want stocks to move up in the short run.